はい、皆さんおはようございます。今日は2021年の1月24日です。今日もスイーキングアルファの記事を読んでみましょう。編集に時間がかかるので読むだけでいいかなと思ってきました。はい、今日選んだ記事は The Move to Cash You Will Regret It。はい、株式投資家に対しての提言ですね。キャッシュ、現金に、逃げるな。絶対あなたは後悔するよ。っていうことですね。Summary 概要 Bonds are looking very expensive and should mostly be avoided. Pockets of the market look overvalued or even body, but you don't have to invest there. Other portions of the market look reasonably valued or even outright undervalued. There are investment ideas on top of that will showcase in this article. Don't go to all cash for a prolonged period of time. Inflation will make you eat losses in real terms. Guaranteed. So, で、この2字の部分 Article thesis. A couple of days ago, I read an article that suggested that investors should move to cash for the next 7 years, as equity market valuations are purportedly too high. I agree that the valuations are indeed quite stretched in some pockets of the market. But not everything is expensive. Moving one's worth to cash, which basically generates no returns at all in today's environment, is a move that many will regret, I believe. In this article, I will try to show some alternatives. ここにそうされます。これはウォーレン・バフェットですね。Invest for the long term.Choose quality. はい、長期投資をしなさい。そうですよね。ウォーレン・バフェットはずっと言ってます。買うなら一生手放さないでいられるようなものを買え。はい、私の投資方法は全く違いますけど。はい。じゃあThe Cash for Cash.KCI Research wrote in an article a couple of days ago that suggested to move to cash for the next 7 years. The main thesis for moving to cash is that US equity markets are historically expensive. The same holds true for US bond markets. This, in turn, means that for the expected returns are weak.Potentially weaker than they were before the Great Recession. I think that this is, in general, a good point, but I don't think the conclusion should be to move to cash for many years. Where I agree and where I don't agree. It is true, the equity markets overall.are expensive right now. That is, I think, even more the case for bond markets. So the S&P 500 for the earning yield is to 4%, which corresponds to 25 times earning multiple.10 years ago, the S&P 500 earning yield was to 6%, which equates to an earning multiple of 17. So the index has gotten around 50% more expensive. US 10-year bonds, meanwhile, have seen their yields sink from around 3.5% a decade ago to about 1.1% right now. 10 years ago, one didn't have to pay around $30 to get $1 a year in income. While today, one has to pay around $60 to get the same income. In other words, bonds have gotten 3 times more expensive when one looks at the income yield. This markets me believe that the bond markets are overvalued relative to equity markets. Factoring in the equity markets have a tendency to deliver higher total returns in the long run, while also accounting for the S&P 500 dividend yield of 1.5%, which is more than the yield on treasuries. I think their equities are better investment compared to bonds and current prices. When we also look at the fact the inflation expectations are little above 2% going forward, bonds surely seem like a bad long-term investment at current levels, as net losses on an inflation-adjusted basis are basically guaranteed. I thus fully agree with KCI research. The bonds are too expensive, and investing in them at the current level is not a good move for most investors. On the other hand, I am not sure the equity markets will necessarily deliver negative returns over the next 7 years. Paying to 25 times earnings for the S&P 500 index surely is not great. But I don't think that this is extraordinarily expensive either. When we account for the fact, the interest rates are at 1%. Getting a 4% earnings yield is not too bad. Looking at the earnings yield of the broad market and the treasury yield gets us to the following picture. Yes, we see that relative to bonds, equity markets are actually rather inexpensive. In the 90s and the 2000s, the yield spread of equities over treasuries was way lower than it is right now. This does not mean the equities are a great visit today, but I think that equities are less overvalued than bonds for sure. I thus wouldn't put the two in the same pocket. After all, paying 25 times earnings for equities. When interest rates are at 1%, that's a completely different thing than paying 25 times earnings for equities. While interest rates are at 3%, 5%, or even 10%, where they were at different times in the past. I also do not agree the moving to cash entirely for 7 years as a good idea. With inflation expectations at 2% plus. It is basically guaranteed that investors who do this will lose a meaningful amount of wealth and real terms, factoring in the massive, unprecedented stimulus and money printing during the current crisis. It also seems possible that inflation will actually be higher than the current consensus estimate of 2.1% going forward. Looking at the prices of many commodities, inflationary pressures seem to be significant. Copper, gold, natural gas, lumber, and so on are way more expensive right now than they were 1 year ago before the pandemic emerged. It seems to me very much possible that these commodity price increases will result in inflation rates rising above 2% a couple of years from now. It thus is possible that going to cash for 7 years will result in 15%, 20%, or even higher losses in real terms. I thus do not see moving to cash as a viable long-term strategy. What else could work? There are a couple of other strategies investors can utilize. However, as investing in bonds, the S&P 500 and going to cash are not the only possibilities. Let's look at a couple of things that may be of volume. Real estate. In terms of ultra-low interest rates, owning real estate could be a viable approach. That is true when one uses the property oneself, but also when one rents the property out. In many markets, rent returns will be higher than the interest one pays, and real estate owners will likely get some price appreciation on top of that. For those that do not want to invest in a property directly, real estate investment trust (V&Q) can be a good alternative, I think. Many REITs are attractively priced. This includes resilient rental REITs such as WPC, and Realty Income. Also some housing REITs such as Equity Residential (EQR) or medical REITs such as Medical Properties Trust (MPW). These REITs trade which yield of 4% to 6% are not expensive based on a price to book or NAV basis. I think it is not likely that one will lose 15% of one's wealth over the next 7 years when investing in a basket of REITs like this. These. はい、それでは単語の方行ってみましょう。Positively。噂によると、その称するところでは、次、Bond、債券、おなじみの債券です。Pocket 松竹、ポケットチキン、prolonged、長引く、長期の。in real terms、実質的に、実質上。thesis、なんだ、エヴァンゲリオン論題。エクイティ、株主資本。これは会計やってる人ならすぐにわかる言葉ですね。ケース、事例。in turn、同様に。Great Recession、世界的金融不況。Factoring、要素。On an inflation adjusted basis、これはこの形で使われることが多いです。インフレ調整後ベースで。extraordinary、異常に、非常に並外れて。lumber、木材。viable、実行可能な。utilize、利用する。value、be a value、価値がある、有用である。lend out、賃借する。price appreciation、高騰。real estate、investment trust、リートのことですね。頭文字を取って、リートになってます。real estate investment trust、reality、リアリティじゃないですね。reality、不動産。はい、皆さんお疲れ様でした。ちょっと編集に時間がかかってしまって、2日ぐらいかかっちゃって、自分も仕事をしているので、もうちょっと簡単に作っていけたらなと思うんですけれども、この単語とか英語は、実際に文字を見て、理解するっていうのも非常に大切なことだと思います。ただ聞き流しっていうのも流行ってますけど、文字で見て、自分も日本語を子供の時に本を毎日読んで覚えていったのを記憶しています。文字を読むことも非常に大切ですので、続けて頑張っていきましょう。それでは皆さん、また次回までお元気でおやすみなさい。